Hello, and welcome to the investment series by SCB Julius Baer, coming to you from Bangkok, Thailand. I'm Joe Caceres, Head of Investment Advisory and Solutions. Thank you for joining us. Today, we'll speak about portfolio leverage, what it is, how it works, and what clients should consider before using it. But first, as we're currently in the midst of the COVID-19 pandemic situation, on behalf of SCB Julius Baer, I would like to wish all of your families the best and hope you stay safe. We look forward to the situation improving and seeing you again face-to-face soon. Joining me on today's episode, it is my pleasure to welcome my colleague, Adrian Mausenauer. Adrian, welcome to the show and thanks for joining me today.
Sawadee krap. Thanks, Joe.
Before we get started on today's topic, since this is your first appearance on our investment series, I wanted to give you a moment to say a few words to our clients, particularly during these trying times.
Thank you, Joe. First of all, I would like to say thank you to all our existing clients, which have supported us since early days. I trust and hope everyone is safe. Thank you also because we have achieved a lot together. You have validated our early understanding that international wealth management should be done right at your doorstep with a partner which has a proud soul and undistracted dedication to Thailand. Therefore, I feel we're much closer to our clients, in particular in a business where trust and relationship matters the most.
Thank you, Adrian. SCB Julius Baer was one of the first to bring Lombard lending to Thailand, and this was made possible through our comprehensive overseas investment platform once the Bank of Thailand relaxed some of the regulatory requirements around lending. So perhaps let's start with the basics. When we say Lombard lending, what exactly do we mean, Adrian?
Lombard lending is nothing new within wealth management. It's just a different word for leverage. Lombard lending is a term which has been originated in the Middle Ages in the Lombardy region in Italy. That's the region where Milan is. It started with rich merchants in the Lombardy region, hence the name, starting to give loans against collateral to their trading partners. Today, Lombard lending is not much different. Today are the private banks who extend loans against collateral. Collateral can be all sorts of marketable securities. These are your bonds, equities, mutual funds, discretionary mandates. Basically, everything which a bank deems of value for collateral to cover for your loan. In simple terms, is basically leverage for reinvestment into your portfolio.
What sort of client is Lombard lending most appropriate for?
In my experience, the use of leverage is very personal. It's a personal choice. First, it depends on your own riskability and your risk tolerance, as leverage investments increasing by definition the risk of your portfolio. Yes, you can potentially boost your returns, but it also comes with additional risk. So therefore, understanding the client's risk tolerance ability is crucial. Second, and often underestimated, are the client's own principles. I have seen clients which have a policy or a belief never taking any loans, not in their businesses, not with real estate, and definitely therefore not in their investment portfolios. So simply being free of debt or free of obligation is a choice we very much have to respect as well. Yet I do believe there's a case to be made for leverage. Lombard lending offers you the possibility to enhance your return on your own capital if you leverage against the right set of investments. Yet again, leverage needs to be done right by having a reasonable and suitable approach.
Thanks, Adrian. And I think that prudent approach is, of course, critical to take into consideration when it comes to leverage. As a wealth management professional with well over 2 decades in the industry, what are some of the key lessons that your experience has taught you with respect to using portfolio leverage for clients?
I have a few points which came clear to me over the years. My most deepest learning was probably during the great financial crisis in 2008, by having gone through stressful times with clients, not as a manager, but as a relationship manager. First of all, what is very simple but important, your underlying investments need to outperform your loan costs at least 2 to 3%. Otherwise, it's not worthwhile doing. So you need to ask yourself the question, can your investment significantly outperform the loan costs over time? Next would be the better managed a diversified portfolio is, in example, like a discretionary mandate or a mutual fund, the better it is to leverage against. Why? Because you have the benefits of diversification and are not relying on a single underlying. This is of major help during stress, as a diversified portfolio has a higher loan to value, which, for instance, our discretionary mandates offer a higher LTV on a portfolio basis than if they would on individual investments. A bit more of technical nature, this is clear. You leverage against something which has a cash flow, for instance, dividends or coupon payments. These are helping you to pay for your loan cost. But the most valuable lesson I have found, this is more on an emotional level, but it's trivial but essential. You have to have a clear reason and clear conviction on why you use leverage. Is leverage truly needed? Is your investment rationale strong enough? What I believe is leverage against a solid portfolio when the market is favorable, the market outlook is favorable. So basically leverage against quality. Have a solid investment case first. So do not think about leverage first and then try to find an investment. So there shouldn't be any banker coming to you and say, hey, let's leverage first. No, think investment first.
I think that last point bears repeating. Leverage is the result of an investment idea. Leverage for the mere sake of leverage is not what we recommend. So how does SCB Julius Baer go about driving this conversation with clients and leading with investments first and leverage second?
It is really our duty and our responsibility to help our clients to make informed investment decisions. Here is where we spend most of our time with clients, living out our investment philosophy. Our investment philosophy is built on a long-term asset allocation approach, incorporating the Julius Baer research and house you into investment decisions. Here is also where we help and where we educate clients if and where needed. So your investment strategy needs to be discussed and reviewed regularly to match your suitability and preference. So our relationship managers, backed with our in-house investment advisors, are helping clients every day, all day, to make investment decisions here in Thailand. So I really feel that we understand our clients well and we are close to them. At SCB Julius Baer, we are here as your partner, and we're really looking forward to be of service to you.
Thank you, Adrian, for joining us today and for sharing your helpful insights.
Thank you for your time, Adhikap.
That concludes today's episode. Please note that not all recommendations are suitable for all clients. Please speak to your SCB Julius Baer relationship manager or investment advisor if you're interested to learn more. Thank you for joining us. We look forward to seeing you again next time. Sawadee Kap.